Trading conditions will remain quite thin through the second week in January, though it's clear that thin should not be confused with stable. The rout in U.S. stocks has rippled into the global equity market, and sentiment into year-end is looking bleak. We've already warned for some time that whatever the case, all of this was to be expected, with the impact of the end of an unprecedented era of ultra-accommodative monetary policy that began a decade ago having yet to play out. But this is what we're seeing in recent weeks, with the lag effect of policy normalization finally kicking in. Of course, when such an event transpires, downside risk that could once be so easily dismissed and brushed aside all of a sudden becomes legitimate downside risk that needs to be considered. One of the big ones out there right now is the partial government shutdown in the U.S. as the president stands off against his opposition, remaining committed to going nowhere until his campaign promise for a border is achieved. The president's lashing out of the Fed chair in recent weeks has continued and isn't helping matters either, with this only increasing the degree of uncertainty in global markets. While the Treasury Secretary has dismissed reports that President Trump was looking to fire Jerome Powell, the market knows that Mnuchin's words could easily be disproven given the president's unpredictability. As far as the dollar goes, the market has been selling the buck against the major currencies, where flight to safety into the dollar on account of all of this U.S.-based drama is making the buck a lot less attractive. But with risk off in full form, the dollar has managed to outperform against commodity and emerging market FX. Speaking of commodities, oil has been in a nightmare free fall since October, when it was trading at its highest level since 2014. And has now extended that free fall this week, trading to its lowest level since June of 2017. Gold, on the other hand, has been powering higher on the back of all the uncertainty, reaching its highest level since June of this year. Looking at today's calendar, most of Europe is out, the UK is off, and the focus will be on the latest developments out of the US relating to this partial government shutdown. On the data front, US Case Shiller and Richmond Fed Manufacturing are the only notable standouts. That's all for now.